What's up, guys? I hope everybody had a great Thanksgiving weekend. I'm putting together a quick video for you guys instead of doing it, over just text. I want to show you guys a visual. Maybe that'll help. I know visuals definitely help me out. So, I wanted to go over what we were looking at into this week. Sort of giving a roadmap, a plan. Um, just so you guys could get a feel for where the overall market sits and maybe trade some setups out there because we do definitely have some setups into this week. It's going to be very important. I think it's going to be a great trading week. The action has been pretty incredible over the past few months. Um, as the market adjusts in this period, we're taking it day by day as we always do, but there's a very crucial period here where we're starting to see a heavy adjustment between the big money and, the smaller guys. Or the week longs are getting shaken out, and a lot of people are taking money off the table. I know the cryptocurrency market crashed this week. Not crashed, but broke down even more. I know Bitcoin's down in the 3,000s. So we'll see how that all plays out. I have the SPY chart up now. I know most of you guys in the chat know that I predominantly trade the SPY intraday simply because I personally think it's the best day trading vehicle out there. Just based off the liquidity and the price of the contracts, it really lets you accomplish your goals, so to speak, in the market. At least for a day trader, someone who's looking to consistently bring profits to the table. So right now I have the daily chart up. As you can see, we're back down into this lower range period after the initial breakdown or correction, or I guess we could just call it an adjustment, from the early February, March range. We're not going to be looking too much at that. We're going to be looking at the action here. And as you can see, we somewhat have sort of a double bottom now. Friday was the short day, so this is going to be interesting to see how that plays out, that Friday when the market closed at 1 p.m. Eastern. We do have somewhat of a double bottom. We have this long wick down here from 2 weeks ago. That's going to be our bottom destination. But as of now, we did hold the double bottom. We held this support, from that's Wednesday's low. We held Wednesday's low. So as of now, the bulls look like they could, this really could open up two different ways. This market's either going to have, positive futures Sunday night and into Monday, and we're going to open up higher. Where if that's the case, we definitely have an upside target of around 267.42 on that price level. As you can see, that was resistance in this area, and somewhat over here as well. So that's going to be our main upside target for the week. If we do open up higher, why I'm going to say that might not be the case is, if you look at our moving averages, clear downtrend. Um, even if we do get upside movement, with these moving averages are going to be tough to break out of. You've seen a downtrend like this, the price action rejects the moving averages pretty heavily. So that's going to be something definitely interesting to keep an eye on. Also, I want to look at the MACD. We're just really starting to get into a red area. We just crossed on Monday. No, what is that? That's Tuesday's session. We just crossed over Tuesday's session. So there is still a lot of room to drop on the SPY, simply based off its indicators and its chart. If we do gap open below this 263 area, our downside target is going to be 259.70 and then around this 257.50 area as well. And that comes from this previous breakdown you can see over here. That's going to be very key this week. So we have a give or take range, on the upside, but obviously the downside has a lot more risk reward potential. As traders, you have to be prepared to go with either trade. You have to be prepared to go either way and not really have a bias. Take what the market gives you. That's what we're going to be looking for, and that's why I always try to tell people and plan ahead that you can't really have a bias going into it. You've got to really attack both sides if you want to be a profitable trader. So that's the SPY. We're going to look over here on the Qs, which is the Nasdaq Tech ETF. somewhat of a similar setup. It doesn't really have that double bottom. And tech has been weaker. I always like to tell people where in a bull market you'll see the super overinflated stocks, the ones that really make historical runs, produce incredible gains. The ones that always light up fastest throughout that bull period are the ones that are the fastest to fall when the market shifts. It's almost, you got to think of it like an inflated balloon. That balloon pops, it's got no life left underneath it. It's gonna drop. That's somewhat what tech has looked like over the past few years. It's almost like another tech bubble, so to speak. You can see it out of some of the stocks, Facebook, Netflix. All the big companies. Nvidia got smacked. It's across the board. Baba was smacked too. All those big companies that you were seeing leading the markets are now the ones with the biggest breakdowns going on throughout their previous chart history. So we're looking at the Qs too. More or less, I like to set up better on the SPY. The Qs are weak, but they somewhat held support. You can see these price levels at 158, 60 to 75 in that range. It held on the close Friday, barely. It rejected, highs of the previous 2 days. So that's definitely a bearish sign. I mean, we have a downside target here of about 156.70 from this previous support area. And if that breaks, we drop down to the next few support lines. 153.85, and you could even go down here. There's definitely room to drop on the Qs. The tech sector is the weakest out of, the bunch. Look at that volume, too. Volume's been crazy going on. Like I was saying, just a big adjustment in the market period. So when you look at the indexes like that, the Qs and the SPY, you got to really grasp the attention for the entire market and what the market is doing and what the market is not only doing, but what it's telling us. So that's definitely important to look at. I want to go over a few setups on some stocks here. I'm going to pull up Apple for you guys. I have this set up with the Fibonacci retracement level. For those of you who don't know what that is, it's just pretty much magical numbers that there's obviously math to it and all that, but I'm not going to get into that too much. It pretty much just displays hidden support and resistance levels based on the chart, and obviously a lot of mathematics put into it. So what we're looking at is just a complete breakdown. It's MACD's pretty overextended. This is something where I'm sort of looking at this week for, somewhat maybe not really a bottoming, but somewhat of a short-term bounce, so to speak. We have this gap here, which is also the 23.6 Fibonacci retracement level, which is the bottom level and like a bullish, not a bullish, a bearish stock. That is like the last level, so to speak, before it officially, goes back to its previous level or previous lows, which would be the 0% mark. So I'm gonna look for Apple for somewhat of a bounce or consolidation, and then follow through to whatever side. There's a lot of room on this upside for a bounce if we do get it off this 169 area back up to this next level to 38%, which is about 182 roughly. So that's the stock I'm definitely looking for this week. Like I said, that gap could pose as support. It was congested, if you look at it, it was a congested area, and it could be a level to find the bounce on. Just something to keep in mind. You look at the weekly chart too. The weekly chart's way overdone. You could look for a nice bounce in this Apple for those long-term guys. Maybe this could be a range to look at. I'm personally not investing much long-term wise. I think I wouldn't want to jump onto the end of a bull market. That's just how I think about it, and that's what I think offers my best risk return on long-term stuff. So that's the Apple setup I have. Another one, this is going to be my favorite setup on the week. This is Netflix. You're going to look here. We have this gap similar to Apple. This gap from about roughly 247 to the lows of 233, if that were to get filled from this lower wick here. Um, if Wednesday's low gets taken out, this has no support until that 233 range. So you have roughly 10 to 13, 10 to 15 points um, before the next support. And that's going to be very key, especially heading into this week where if the Qs and the SPY do break that low and open below, this stock could totally drop and provide a great opportunity for us. We're definitely going to keep that on watch. You have the MACD, clear downtrend, moving averages, clear downtrend. We're looking for more follow through on it. Definitely going to keep that in mind. So yeah, that's Netflix. Let's see what else do we got. Hop over on Facebook too. Facebook doesn't have much support if it breaks Wednesday's low. Similar setup to Netflix. If it breaks that low, it doesn't have support until 122.70 or 122.85, I believe that was, give or take. From this range right here. There's a few points to be made on that side of the trade. Just a quick one. 4 or 5 points. Great opportunity there. That's all we're looking for is just quick moves, quick predictable moves. As you can see, definitely a breakdown in this stock. We are bearish. We'll look at the weekly. Weekly is overextended. That's what I'm sort of looking at. I was talking to another member about this. Is that dailies still provide room to drop, whereas the weeklies almost look like they're oversold. So we're gonna have to take a quick look at that. Maybe make our trades fairly quick and not hang around too long and leave our risk open. Another one, I talked about this 2 weeks ago or last week. We're still in a almost a descending triangle pattern on Pfizer. Definitely one to keep on watch. We have a clear baseline, and the MACD is just starting to break. The moving averages are looking to come out on the downside. We could look at this for a breakdown this week into the next support levels. We have support around here in the 41.70 range. So there's definitely some opportunities this week. We're going to have to keep all in mind. No bias to this trading week, and definitely going to look to kill it. As always, you guys know how I do it. I hope you guys all have a great end of the weekend, and let's get hyped for the next week.